Are you ready to cut through the noise, all the headlines, the hype, and get straight to the facts on a company that's just been dominating conversations lately? Well, you're in the right place. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a deep dive into NVIDIA, a true titan in the tech world. We've poured over our research into really comprehensive investment analysis, and we're here to bring you a crystal clear picture of, well, everything you need to know.
That's right. Our mission for this session really is to pull out the most important nuggets of knowledge from that research, to understand what truly matters about NVIDIA's current standing, its future outlook, and maybe uncover a few surprising facts along the way. We're here to help you get well-informed, quickly and thoroughly.
Okay, let's unpack this then. Before we dive into the really fascinating numbers, maybe let's just establish who NVIDIA is at its core. What's their main business, really?
Basically, NVIDIA Corporation is a computing infrastructure company. At its heart, yeah. Their core business revolves around providing graphics, compute, and networking solutions globally. Think of them as like building the foundational blocks for a huge range of digital activities.
Right. And where do we see their presence specifically? What are the key segments, the markets they serve that are really driving the business?
Well, their operations are mainly split into two key areas. First, you've got compute and networking. This is the backbone for areas like data centers, SI, automotive, robotics, really important stuff.
The big growth drivers we hear so much about.
Exactly. And second, there's graphics. This covers their, widely recognized products like GeForce GPUs for gaming.
Yeah, gamers know those.
For sure. And Quadro TX for professional visualization, plus their Omniverse platform. So yeah, they're truly embedded in everything from like intense gaming sessions to powering really sophisticated AI models, even autonomous vehicles.
Okay, now let's peel back another layer. The financials. What does the raw data reveal about NVIDIA's journey? I mean, our research lays out this fascinating financial story. What does the time series data tell us about their growth path? It's been pretty eye-popping, hasn't it?
Oh, absolutely. What really stands out in the numbers is NVIDIA's just exceptional annual growth, particularly from fiscal year 22 to fiscal 25. Revenue has just surged. I mean, jumping over 100% in both FY24 and FY25. It reached a massive $130.497 million.
Wow.
And what's, particularly interesting is the strong rebound in their operational leverage. Basically, this means their profits are growing even faster than their revenues because their fixed costs aren't scaling up quite as quickly. We saw their gross, EBITDA, and operating margins, along with net income and EPS, all bounce back really robustly after a bit of a dip in FY23. And this efficiency, it's kind of highlighted by a decrease in R&D as a percentage of revenue, too.
That long-term growth is phenomenal, just incredible momentum. But, the market's always focused on the now, right? It's a fickle beast. So what's the latest snapshot? What's Q1 2025 telling us about this hyper-growth story? Does our research flag any recent shifts?
It does, yeah. The latest quarterly data, specifically from Q1 2025, it does point to a significant deceleration in sequential revenue growth. So quarter-over-quarter growth is slowing down. And crucially, we've also seen a pretty sharp contraction in gross and operating margins. Gross margins fell from like 73% down to 60.5%.
Ouch.
Yeah, and operating margins from about 61% down to 49%. To put that in perspective, for every dollar of revenue, NVIDIA is now keeping roughly 12 to 13 cents less profit before operating costs. That's a significant squeeze.
That's not just a slight dip then?
No, not at all. And combined with the slowing growth, it definitely warrants close attention. It's something you need to watch.
Okay, so given everything you just laid out, this incredible growth, the innovation, it almost feels like a no-brainer investment for some. But let's get critical for a second. Does our research suggest the market might have gotten a bit ahead of itself on NVIDIA's valuation, compared to its peers?
That's a really great question. And our research does suggest the answer is probably yes. NVIDIA trades at significantly higher valuation multiples compared to the semiconductor industry average, much higher. For instance, its EV/EBITDA ratio is sitting around 43.19, the industry average, 24.59.
Big difference.
Huge. And its price sales is at 28.31 compared to an industry average of just 11.66. So this isn't just a small premium. It feels like the market is betting heavily on, almost perfection in NVIDIA's future execution.
Right. Pricing in a lot of good news.
Exactly. It implies a really substantial market premium for their growth and obviously their leadership in AI. And while its trailing PE is actually slightly below the industry average, its forward PE is considerably higher. That really underscores the expectation for massive future growth, maybe almost utopian growth, you could say.
That's a powerful point. Does the analysis reveal any blind spots, any gaps in this comparative financial picture that could be important for listeners to know about?
Yes, there's actually a notable gap. The analysis we looked at, it didn't include free cash flow or FCF metrics for comparison. And FCF is really crucial, right? Because it shows how much actual cash a company generates after it covers its operating expenses and its capital expenditure.
The real cash left over.
Precisely. Without that, you're kind of missing a key piece of the liquidity and financial health story, especially, for a high-growth tech company like NVIDIA that's investing heavily.
Okay, that makes sense. So what's really fascinating here is that this market premium, it isn't just about past performance. It's this massive bet on future potential. So what do our sources say about NVIDIA's, relentless pace of innovation? Their strategic moves designed to keep them on that leading edge.
Oh, they've been incredibly active on that front. Really busy. Our research details numerous product launches just between April and July 2025 across AI, gaming, robotics.
Keeping the foot on the gas.
Absolutely. Perhaps the most significant is the new GeForce RTX 50 series GPUs. They're built on their cutting-edge Blackwell architecture, and this Blackwell AI processor, it's now in full production and seeing really high demand. Plus, we're also seeing hints of upcoming Blackwell Ultra and even Vera Rubin architectures on the horizon. That speaks volumes about their continuous development pipeline, right?
Always looking ahead.
Definitely. And beyond just the hardware, they're making significant advances in generative AI models, robotics software, things like NVIDIA Cosmos, Isaac AMR for autonomous mobile robots, Project GR00T. They're also forging strategic partnerships. General Motors is a prime example there. It really underscores their push into new markets, new verticals.
Right, expanding their reach. So if we connect this to the bigger picture, what recent company news or even sector news has been impacting NVIDIA, for better or worse?
Well, there have been several crucial developments recently. NVIDIA actually received U.S. government assurances allowing them to resume H20 GPU sales in China. Our analysis identifies China as a really crucial market for them.
So easing trade tensions are a positive then?
Seems like a net positive, yeah. Also, the company reported strong Q1 2026 earnings per share and revenue growth. That's led analysts to largely maintain a buy consensus. We're also seeing partnerships continue, like the one with NVIDIA Semiconductor for 800-volt data center architecture. That highlights ongoing innovation collaboration.
Keeping the ecosystem strong.
Exactly. And furthermore, NVIDIA's reliance on TSMC, the world's largest contract chip maker, that's significant. And TSMC's own blockbuster Q2 2025 results, they confirmed really robust AI chip demand, which is obviously excellent news for NVIDIA and the whole AI ecosystem. More broadly, the AI revolution still seems robust. U.S. export restrictions seem to be easing slightly, and data center investments are increasing right across the industry. It paints a pretty favorable backdrop, generally speaking.
Okay, so the fundamentals look strong. The innovation engine is clearly firing on all cylinders.
Yeah.
But for many people, the charts are the ultimate tell, right? What are they screaming about NVIDIA's short-term path right now? What stands out when we look at the technical analysis in our research?
Yeah, the technicals are interesting. Our research shows a consistently bullish short to medium term outlook from multiple indicators. It paints a very clear picture of momentum right now. If you look at, say, simple price analysis, it shows a really strong bullish trend from early May right through to mid-July 2025. The price moved from about $98 to over $170.
Quite a run.
A huge run. And critically, previous resistance levels have been broken and seem to have converted into support. That's a classic bullish sign. Then there's the awesome oscillator. It's a momentum indicator, basically compares recent price movement to a broader time frame. It's been showing predominantly positive values since late June, even hitting new peaks above 16. That signifies strong and, importantly, accelerating bullish momentum, like a car that's not just fast, but still picking up speed.
Okay.
The MCD moving average convergence divergence that shows a clear bullish crossover around late June, too. Both lines are trending upwards, the gap is widening. indicating strengthening bullish momentum. Think of it as short-term momentum gaining speed over the long-term trend.
Another green light.
Pretty much. And the candlestick price analysis confirms this. You see consistent higher highs, higher lows, lots of green candlesticks showing strong buying pressure. Finally, Kaufman's adaptive moving average, that line is consistently trending upwards, acting as dynamic support, and the price is significantly above it. It just reinforces that strong uptrend.
Wow. Okay. So a lot of green lights, a lot of bullish signals from the technical side, but, as always, it's crucial to look at both sides of the coin. Are there any cautionary signs, anything from the technical analysis that our research flags as maybe a reason to pause?
There are indeed a couple of potential cautions, yeah. The Relative Strength Index, or RSI, it's currently sitting at approximately 80. Think of the stock like a coiled spring that's been compressed almost to its limit. An RSI that high indicates overbought conditions.
Meaning it might be stretched too thin.
Exactly. It often suggests there's potential for price correction or maybe just some consolidation, sideways movement in the short term. Additionally, while the price riding the upper Bollinger Band signifies strong bullish momentum, the fact that the bands are widening indicates increasing volatility. So yes, it's moving fast upwards, but the path is also becoming a bit more unpredictable.
Got it. So speed and bumpiness potentially increasing together. Yeah. Okay. Given all this, what are the experts in the field collectively recommending? What's the overall analyst community saying?
Well, our research shows an overwhelmingly outperformed by consensus from analysts. It's quite striking, actually. These recommendations have consistently made up a significant majority, often close to 100% going back quite a while, since 2017.
Wow, since 2017.
Yeah, it indicates a near unanimous positive outlook from the analyst community, which is frankly pretty rare to see maintained for such a long period.
So everyone's bullish, the technicals have been, screaming upwards, but here's maybe a surprising fact, or at least a counterpoint, from our analysis. What does our fair value analysis say? Does the intrinsic value, the underlying value of the company based on its fundamentals, does that align with its current market price? Or is something else going on?
This is where it gets really interesting, as you say. Based on our discounted cash flow, or DCF analysis, the estimated fair value for NVIDIA is around $154.77 using the free cash flow method, or maybe $164.52 if you use the earnings per share method.
Okay, and the last closing price was?
$172.41. So when we compare the fair value estimates to that closing price, NVIDIA actually appears to be overvalued.
Overvalued, despite all the bullishness.
Right. This indicates what we call a negative margin of safety, which is a really crucial insight for investors. It suggests the market might be pricing in, a kind of utopian future for NVIDIA, one that maybe even the most innovative company could struggle to achieve consistently year after year. It's a big contrast to that overwhelming analyst optimism, isn't it?
It really is. Okay, so let's tie this all together. What does this all mean for you, the listener? After weighing all these powerful factors from our research, the incredible growth, the market's sky-high expectations, the technical momentum, but also the valuation concerns and those recent margin shifts, what's the net result? What is the core recommendation from our analysis?
Okay, the core recommendation after considering all these factors is hold.
Hold. Okay, let's break that down.
Let's elaborate on the top reasons for this recommendation. This is the bullish case, really, that underpins the hold. First, you just can't ignore the dominant market position in innovation. NVIDIA's leadership in AI accelerators, data center solutions, next-gen GPUs like Blackwell, it's unparalleled right now. That's driving explosive revenue growth, strong operational leverage. And those recent product launches, strategic partnerships, they just reinforce its competitive advantage.
The innovation story is strong.
Very strong. Second, there's the strong bullish momentum and analyst sentiment. We just talked about the technical indicators, simple price analysis, awesome oscillator, Teddy, candlesticks, they consistently show a strong bullish trend, increasing momentum. And that's further supported by those near unanimous outperform by recommendations from analysts we mentioned. Hard to ignore that wall of positive sentiment.
That's a powerful case for the bulls, absolutely. But, every high-growth story has its skeptics, and every investment carries risks. What are the counter-arguments? The red flags are research highlights that might make someone pause, especially given that hold, not buy recommendation.
Right. The hold reflects these concerns, too. There are three main ones. First, as we just discussed, overvaluation. Despite that strong growth, our fair value analysis suggests NVIDIA is currently overvalued. That means a lower margin of safety. You're essentially paying a high price today for future growth that might already be fully baked into the stock price.
Less room for error, maybe.
Precisely. Second, there's the margin contraction and decelerating growth. That recent quarterly data showed a significant decline in gross and operating margins, plus a slowdown in sequential revenue growth. Now, this could signal a moderation of that hypergrowth phase and potentially profitability pressures going forward. It's a yellow flag, at least.
Something to watch closely.
Definitely. And third, overbought conditions. That RSI indicator suggests the stock is in overbought territory, which, as we said, suggests potential for a short-term price correction or maybe just some consolidation. It can't just keep going up in a straight line forever, realistically.
Okay, that makes sense. This leads us then to the actionable next steps. For listeners wondering, okay, what should I do next, or how should I approach this information?
Right, so our research offers some practical guidance here. For existing investors, you might consider holding your position to capitalize on that continued bullish momentum we see. But be mindful of potential short-term pullbacks given those overbought conditions. Don't be surprised if there's some volatility. For prospective investors, folks thinking about getting in, it might be wise to consider waiting. Maybe wait for a potential pullback or a consolidation phase, looking for a more favorable entry point given the current overvaluation and those overbought signals.
So patience might be a virtue here.
It could be, and across the board for everyone, it's really crucial to monitor upcoming quarterly reports very closely. Look for signs of continued margin compression or any further deceleration in revenue growth. These are going to be critical indicators for the future trajectory.
Absolutely critical. So, based on a deep dive today, maybe a final thought for you to consider. Think about this delicate balance for high-growth tech companies like NVIDIA. How much of that incredible future is already priced into the stock today? And how might even a slightly less than stellar report, maybe just meeting expectations instead of blowing them away? How might that impact a stock with such high expectations, such a premium valuation, and that overbought signal flashing? It's a really fascinating tightrope walk, isn't it, between that incredible innovation and the weight of market sentiment and expectation. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.